Hello, finance aficionados, ready to fine-tune your trading playbook and master the evolving economic scene? If you've missed golden chances or been caught off guard by swift shifts, stay tuned. This September 3rd, 2025, update is packed with practical strategies to revolutionize your investments. Welcome to AmosFinance, where we decode finance for every level, from beginners to market pros. I'm John Hawk, your trusted advisor, and today we're diving into the latest on equities, digital assets, global developments, and more. Stick around for my key insight that could protect your funds or uncover a major opportunity. If it resonates, hit like now, subscribe for regular updates, share your top money question in the comments, and turn on bells. Let's grow this community. We'll cover indices, top stocks, bonds, forex, commodities, earnings, crypto, geopolitics, central banks, inflation, trends, and that crucial takeaway: how will this shape your finances? Let's dive in and turn data into smart decisions. Let's set the pulse with the key market gauges. The S&P 500 is at 640.27, down 0.69% from yesterday's 645.05, signaling caution amid tariff fears. The Nasdaq opened lower at -1279.63, down 0.82%, led by weakness in tech. Dow Jones stands at -45295.81, off 0.55%, hurting industrial exposure. The FTSE 100 holds at 9164.50, marginally down 0.25%, while Japan's Nikkei reads 42590.00, down 0.30%. Year-to-date, indices remain 12–15% higher. In real-world terms, a $25K Nasdaq position might be $3,300 up this year, yet down $174 today. It's a stress test, especially for portfolios tilted to international equity. Takeaway: short-term fades can dent portfolios by 1–4% if unprotected. Smart investors lean into US-centric ETFs like VOO, using dips as opportunistic entry points. How are you weighing your asset mix today? Let's zoom into big movers. Apple at 231.80 slipped 0.10%. Demand holds, but imported component costs may gnaw margins. Tesla at 332.20 eased 0.50%, still poised on EV momentum even with logistics concerns. Microsoft at 505.70 dipped 0.20%, its cloud business proving resilient. Amazon at 227.00 fell 0.80%, while Meta at 732.00 dropped 0.90%. Despite that, YTD gains still hover around 18.55% for these names. Tesla's 0.5% slide alone erases a week's upside on a $10K stake, yet long-term EV fundamentals make it a potential buy zone. Takeaway: expect 8–18% volatility in equities. Diversify with non-tech plays to cushion drops. Which stock would you back for a bounce back? Switching to bonds, the portfolio stabilizer. The US 10-year yield rose to 4.27%, and the 30-year to 4.97%, both inching higher. On the global front, Germany is at 2.735%, the UK 4.730%, and Japan 1.610%. US yields are about 0.45 points higher than a year ago, signaling tighter outlooks. For a $50K bond holding, that's roughly $225 more income annually compared to 2024. Takeaway: higher yields mean income, but prices fall. Mid-term treasuries strike a good balance, potentially softening equity drops by 5–10%. Bond thoughts, let's discuss. Currencies are the silent influencers. EUR USD at 1.1705 is up 0.15%, the GBP USD at 1.3510 is slightly stronger, while USD JPY is 147.00, up 0.05%, USD CNY at 7.1520 ticks higher, and USD NGN holds at 1,534. The dollar's gained 5–10% year-to-date, a headwind for exporters, but a tailwind for US-based buyers. Takeaway: a strong dollar acts like friction on international returns. Hedging or adjusting exposure can protect profits. Commodities remain a strategic anchor. Gold is at 3550.00, rising 1.0% today. Silver at 41.50, plus 1.8%. Oil dropped, WTI at 63.50, 0.8%. Brent at 67.30, 0.7%. while natural gas climbed to 2.95 plus 3.0%. Oil's YTD drop, 17-18%, equates to a $2,550 loss on a $15K energy ETF. But shippers benefited, saving on fuel costs and boosting margins. Takeaway: gold and silver buffer volatility, and energy shifts impact bottom lines. Allocating 5-10% to commodities adds a valuable hedge. Earnings season is at the finish line, but watch these names: Zscaler, 43.14B. EPS estimated 0.47, Nvidia, 4.45T, estimated 1.01, Royal Bank of Canada, 193.88B, estimated 3.29, CrowdStrike, 102.86B, estimated 0.83, and Snowflake, 64.15B, estimated 0.27. An Nvidia beat can lift semiconductor ETFs 3-5%. These reports often set weekly momentum. Takeaway: earnings calls now matter most. Watch guidance, especially for tariff or cost updates, and tilt exposure accordingly. Crypto volatility continues. Bitcoin at 107,563.00 dropped 0.69%, Ethereum at 4,389.42 down 1.04%, Solana at 198.557 dropped 2.16%, XRP at 2.72, 3.32%, and Binance Coin at 869.87, minus 1.05%. Bitcoin still up tilde 150% YTD. A $10K Bitcoin position could now be tilde $25K, even after a pullback. Takeaway: crypto pullbacks offer potential entry points. Cap exposure at 1.5% and let long-term trends work in your favor. Global tensions heighten. The EU-US trade pact sparks backlash in India, Taiwan ramps defense, Ukraine deploys new systems, and US ties with Russia-China deteriorate. Such friction can jolt supply chains and inflation by 5-10%. Takeaway: geopolitical shocks are unpredictable but impactful. Diversify across regions and favor domestic exposure where possible. Central banks remain pivotal. Fed, 4.50%, ECB, 2.15%, BOE, 4.00%, SNB, 0.00%, RBA, steady. With jobs weakening, the Fed hints at potential cuts, while the ECB remains cautious. A 25 BPS cut could lower mortgage bills by $100 plus per month on a $400K loan. Takeaway: rate cuts can revive markets. Position early in interest-sensitive sectors for a head start. Inflation readings: US at 2.7% YoY, core at 2.9%. China stands flat at 0%, and the UK edges to 3.8%. Takeaway: inflation softens unequally. Allocating to TIPS or inflation-linked assets provides protection. Summary: markets are cautious. Stocks dip, bonds yield, the dollar is strong, commodities mixed, crypto consolidates. Takeaway: it's a market pause for recalibration. Stay disciplined, focus on resilient sectors, and avoid emotional leaps. Here's today's takeaway: markets stay tense around tariffs and Fed policy. Lean into US large caps, dreadnought bonds, and use gold or crypto as hedges. Diversify, stay alert to policy signals, and you may sway 10-20% outcomes in your favor. If this helped sharpen your view, like, subscribe, and reveal your strategy, with a comment touching on, where would you deploy $10K now? Gold, crypto, or bonds? Until tomorrow, trade smart and grow strong.